Now, Slatestone Wealth Chief Market Strategist Kenny Polcari with $2 billion in assets under management, and J.P. Morgan Asset Management Global Market Strategist Jack Manley. Kenny, take it away. First of all, you're watching the action, and we saw the markets go from up to down, then to up, and it was really tentative trading.
Yeah, I didn't see anything new in this statement, not anything certainly I didn't expect. Rates were going to be unchanged. That's what I thought. I don't think we're getting a rate change through the end of this year. I'm in that camp that there's no cuts for anyone coming. And on top of that, other than the geopolitical situation, which is causing angst, I don't think you change your strategy at all. As a long-term investor, you remain involved. You take advantage of names that get arbitrarily dislocated because of emotional nervousness, or you kind of stay in your big, well-managed, diversified, large cap and mega cap names.
Okay, mega caps like what? When we look at this, Jack, we've got Microsoft, which has recently been hitting record highs. You heard Jay Powell reference AI, and he said stunning developments. He also wouldn't talk about what it would do to, and this has been a huge topic certainly today after Amazon CEO had said, yeah, you know, we're going to shrink some of our workforce due to AI. But do you take a bet on tech and equities in that land?
Yeah, I mean, if I'm taking a bet on tech or equities, frankly, it's not because Jay Powell told me to. I think that's a funny story that he happened to bring it up, but the fact that that's driving the NASDAQ higher, that's not in and of itself particularly interesting to me. The long-term story, though, Liz, I think is extremely compelling for AI, yes, but also technology more broadly. And I think that if you are an investor right now looking for those secular trends, things that you can really sink your teeth into that will deliver sustainable, durable, long-term, strong performance in your portfolio, technology is where it's going to be. I think the other nice thing to say about tech, though, and I think this is true for U.S. growth equity a little bit more broadly, is that these names are so big and so diversified and so systematically important to the global financial landscape that they're actually a lot less sensitive to changes in interest rates than some of those less important, smaller companies that might be there in the equity market. And that's important given today's announcement, because while I do think that today's announcement was a good announcement, I'm actually reasonably optimistic after everything that Powell announced, particularly with changes, even with changes, I should say, to the summary economic projections and to the dot plot. There was a hawkish turn in that dot plot, right? The Fed told us just 3 months ago to expect 50 basis points of easing this year, 50 next year, 25 the year after that. Now it's 50 basis points of easing this year, 25 next year, and 25 the year after that. We've removed a full 50 basis points of easing off the table in the next 2 years. If you're rate sensitive, that's a problem. But these large cap, mega cap, multinational tech names, the AI names, they're not so rate sensitive. They're able to weather this storm.
Kenny, when you look at the opportunity out there, the huge bubbling cauldron of stocks out there that people can pick and choose from, which ones look hottest to you right now?
Well, the ones that I like, and they fall into the category. First of all, you always call it AI. Digital Realty, DLR, is a name that you have to own, right? It provides all that space for all these servers that are going to run all this AI. So that stock has acted very well. It's a name that you'd like to own. Certainly, it's a name that you should own if, to get some other exposure, kind of AI tech exposure from a different angle, right? It's not NVIDIA, it's not Palantir, but it's where all those servers have to live.
And can I just ask you, Kenny, is there a dividend to this? Because a lot of these realty trusts, no matter what they're doing, whether it's warehouses or healthcare or hospitals, they're good dividends.
Yeah, they are. And so that's another reason that you want to own it, right? Because you're going to take it and just reinvest it into the stock, which is what I would always tell anyone to do if they're in the building stage. You want to take any stock that's paying you a dividend and reinvest it into that same name to build a better portfolio. Then you got from the banking side, JP Morgan, which I think is always a classic mega cap. A solid name for anybody to have. It's not going to make a difference. Jay Powell didn't cut rates, say that's not a negative for J.P. Morgan. And then Costco, if you just want to be defensive, because you should always have a little bit of a defensive in your portfolio, is a name like Costco. People are not going to stop shopping no matter what happens with tariffs. You still have to go out and eat. You still have to go out and buy the stuff that people are buying at Costco. And so they're going to end up still going to Costco. So those are the three names. We own them. We like them. I continue to like them on any pullback.
What did I tell you guys? You know, the market's up, down, all around. The Dow is now down about 5 points, moving all around. Let me just finish with you, Jack. We just heard from the president about Israel, Iran, a lot of different messaging coming out of the White House. How much does that play into the psyche of the investor going forward?
I mean, at this point, we are so inundated with bad news, with scary headlines, Liz, that I think, unfortunately, the reality is that this is just one more problem that we have to deal with as globally focused investors. If it were operating in sort of an isolation, if there was nothing else to worry about, I think it would have a much bigger impact on investor psyche. I think at this point, we're all a little bit fatigued from this bad news. I would say that, of course, things can get much worse. Things are quite scary out there. Things are quite volatile. But if we try to bring it back to the market conversation, which I think is always where we want to be, we have to remember that, yes, WTI is up a lot right now on those risks associated with that part of the world. But it's $75 a barrel. It's where it was back in January. This is not uncharted territory. And it's off of such low levels that, yes, the increase might be a little bit inflationary, but I don't think it's going to hit growth too hard.
Yeah, month to date, I will just tell our viewers, we do have West Texas Intermediate up about 18%. But this thing doesn't feel like it's going to stay incredibly high. I like this optimism. Jack and Kenny, thank you very much.